Bitcoin corrects after getting just shy of 100K after Micheal Saylor completes another massive purchase. Short-dated puts catch a bid, signaling near-term caution in the options market, but long-dated Vega also moves higher, showing that options traders expect these wild moves to remain well into next year. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight, and I've got my man Dave here from FRNT. And guess what? No guest today. It's just you and me for a catch-up. How you doing?
Yeah, good. I think everyone's made too much money. We couldn't get everyone in the studio.
yeah, exactly. It's been a while since it was just us.
So close, but so far to that
I told you it wouldn't hit 100K in November.
You weren't so cocky to
Oh my God. Last week I was like, I've definitely lost this bet. I've definitely lost it. Good job we didn't put any real money on it.
I know, but I've seen the wall of like offers coming in. It's always going to be a bit of a chop. I thought we'd get through there. Actually, I thought we'd kind of blast through it.
Well, Saylor did his best to charge it through there.
He did, yeah.
$5.5 billion or something last week.
He's really going all in. But it seems I like that. I mean, that's kind of dominated a lot of the conversation, right? Like the MicroStrategy stuff. What are your thoughts around that? Because I know you this whole convert trade, and
it's the only thing anyone was talking about last week, right? So the thing that I've always struggled to understand before was he's clearly got a lot of Bitcoin risk, right? And you can see that and you can see that in the fact that his stock trades at a very high vol, right? Like it moves around on like 100, 200 vol, whatever it is, right? It's pretty high. So why are people just so willing to take on the credit risk of MicroStrategy and just give him all this capital so he can then go and buy Bitcoin with it, right?
0% coupon.
Yeah, so I didn't understand that initially. Like, why is he able to raise money so cheaply and pile it in? Because we all know what he's doing with it. It's not like he's raising all this money to then put into a low risk operation that just creates wealth, right? Then you can understand why his credit might be quite secure. So I was like, why is his credit trading so cheap? And the reality is, it's not that his credit's trading cheap, right? In fact, we don't know where his credit's trading because there's no such thing as a credit default swap on MicroStrategy, right? The credit markets have these instruments called credit default swaps that allow you to see the price of credit in a certain name and whether it's getting a riskier or whether it's not. But it's not in the S&P 500, the stock, and it doesn't have credit default swaps, right? And probably everyone's too damn scared to make markets in them anyway, right?
Yeah.
But so then what is a convertible bond, right? A convertible bond, it has a bond structure. So it has the credit risk of MicroStrategy. So obviously if they go bust and they basically can't pay back their creditors, you've got a problem if you've lent them money. But the other side of that trade is that it's got a call option on the stock because there's a price at which you convert your bond into shares if the stock just goes to the moon, right? And it's that call option that people are buying these converts for, right? Mm-hmm. And they're not buying these call options because they're bullish Bitcoin and they just think it's going to the moon like he does. They're actually arbing those call options. So they are buying his bonds, which contain a long-dated call option on MicroStrategy's stock price, right? Mm-hmm. And then against those bonds, they're selling shares, right, in MicroStrategy, okay? And then they actually don't have any MicroStrategy exposure. I mean, they've got the credit risk potentially still on the long side of that bond. But in terms of the actual spot price, they've got no real exposure. But if the spot price moves around, just like when you delta hedge an option, they will have this gamma exposure that allows them to monetize the volatility of the stock, right?
And those converts are being issued at a lower vol.
They're being issued now, yeah, exactly, because they're so long dated. There is no long dated vol market, really, a liquid one for, MicroStrategy options, right? Yeah. It probably trades massive size out to the next 6 months and then there's nothing there, right?
Yeah.
So they're getting hold of MicroStrategy vol at a 60 vol, right? And they're able to trade the gamma of that vol and it's realizing 200. Okay, so the convert guys are just loving this because they're just printing money every time they hedge their gamma on a 60 vol when the stock's so volatile. So it's like the more he levers himself up, the more volatile MicroStrategy becomes as a function of Bitcoin's volatility. And the more attractive the convert arb trade is, that he's offering them this vol at 60 when it's realizing 200. So there's always going to be appetite for people to buy his convert, and i.e. to give him more capital to then go and buy more Bitcoin.
Yeah, he gets his capital.
So it's a really weird arb. Now, clearly the picture will change somewhat if Bitcoin decides to drop in half, right? Go from 100K to 50K. Maybe the picture will change, but the sheer volatility that will create in MicroStrategy shares, maybe that means he will be able to raise more converts, right? Because again, he's giving them that option at a really cheap price when his stock is going haywire, right? So I just find it a fascinating trade.
Essentially, those convert like arb traders are long gamma. So when the stock does start falling, they're there on the bid, right?
Exactly. That's the perverse thing. Like, people think, oh yeah, it's all going to blow up, it's all going to blow up. But if you've got a call, like all those converts that he did a year ago, 2 years ago, however long, and he's been doing them like so regularly, right? But a lot of them have blasted so deeply in the money that the convert guys are just short 100% delta against those options. So people look at the short interest in the name and go, oh, look at all that short interest. It's going to squeeze the name. Utter nonsense. Those shorts are against in the money converts. They don't need to go anywhere unless that convert gets called, basically, right? And then they'll close it out. But otherwise, those shorts, if the stock dumps, those shorts are going to get covered as those convert guys are hedging the delta and they're hedging the gamma essentially and just trading the volatility. So it provides support to the stock that those shorts are there because they're there against an option. It's just a question of where the strike is of that option and how much gamma that option has on it. Right?
It's a good point because it's not just in like MicroStrategy. Like there's a lot being talked about like ETH shorts at the moment and things like that. You get it a lot in like Treasury shorts and all this stuff, but actually,
what's it against?
What's it against? Often when there's a massive, sizable short in the market, it's normally part of some arb.
Yeah, it's not just a speculative short.
Yeah, because everyone does some naked short.
Yeah.
And
unless it's like GameStop, right? But Citron, that Citron fund or whatever, it came out and said they were going short MicroStrategy, which is why it marked a top in the stock last week. The stock got into the 500s and then crashed into the 300s, but it's kind of stabilized now. Well, stabilized in like the 400s again. But I think it's super interesting because everyone wants to talk about it. And I think a lot of people are kind of doom saying, it's going to all blow up and all this stuff. But once you understand the kind of true arbitrage in that he's able to raise this capital because he's selling the volatility of his stock at an extreme discount to what his stock is realizing. And his stock is going to continue to realize because it's like a 2 to 3x on Bitcoin, and Bitcoin doesn't really ever realize much less than 30, 40 vol. So if Bitcoin realizes 30, 40 vol, it kind of means MicroStrategy has to realize 60, 70, 80 vol. And sometimes it's realizing 200 vol, right? So it's just making that vol sale embedded in the convert so attractive and therefore making it super easy for him to raise capital, right? So I don't know what the limit is on how much capital he's going to be able to raise, right? But clearly he's shown he's like the biggest guy in the converts. I mean, they've issued the most convertibles out of anyone.
I mean, what's he looking to raise? Like 42 billion or something like that, I think, over the next how long.
But I'll tell you what I want to know, and you might have more thoughts on this, like how much impact do his Bitcoin purchases actually have, right? It's like we've run up from 65K pre-election to 100K. How much of that would we have actually got if it wasn't for Micheal Saylor buying? Right?
Yeah, I mean, the market's still quite deep now, right? In terms of like you think over, you think of the size of some of the inflows into like the Bitcoin ETFs and stuff. I mean, clearly he's a big buyer out there, and he's quite a consistent buyer. Like as we've run into that like 100K level, you've got some of the long-term sort of holders and stuff starting to liquidate and sell into that. So there's some pretty chunky offsetting flows as well. So it's big, but I don't think it's like, I wouldn't look and go, oh, Saylor, you're the reason we're up here. But yeah, I mean, he's just a big kind of buyer in the space. but yeah, like it's a deep market now, and some of the volumes generally going through on either side of the market are pretty huge. And look, this is a probably good segue into like thinking around the macro and stuff. I've been saying like for a while really since the election, the macro kind of feels a bit sidelined in terms of this is such a pure demand supply dynamic that's been driving Bitcoin, and I don't think that goes away anytime soon because there's clearly been this narrative shift. I think there's so much money that's been sidelined, waiting for a friendlier like political and regulatory environment in the US to come in, and that money's coming in and it's flowing in, and that's why I don't think that stops anytime soon. So ironically, in the past week, I said about these headwinds we had from like US yields and the dollar, that this week's turned more favorable. We can get into that, but the macro headwinds have turned slightly into tailwinds. But we've seen a slight change in the supply demand dynamic where, you know, we're just seeing some take profits coming in, and it's just kind of battered us away from that 100K level. But ironically, the macro just looks a little bit more supportive actually over this week than what it has been. But yeah, it's all supply and demand at the moment. But I don't think that demand's going anywhere. So we kind of soak up this short-term supply. People got themselves levered long, probably get squeezed out. I mean, I think coming in here, we were 92.5K-ish. Maybe we get a flush to like 88K or something like that.
Fingers crossed. I'm hedged.
You're hedged. You're right. But I'm still like pretty confident we got to trade through 100K by year end, and looking pretty good.
Cool. So when I think about what the options market's saying this week, I would say that there's been quite a dramatic shift in put skew in the front end, right? So we obviously, as we were rallying up to 100K, we were seeing calls getting rolled up. So continuing bullish momentum, people taking out in the money calls, rolling them up into call spreads, things like that. And there wasn't a lot of hedging going on. There was a little bit, but nothing too much. But then this week, obviously, after we stalled out and we couldn't break 100, we've had risk reversals coming in, so buying, put, selling calls. We've had call spreads being sold, and then we've had short-dated put skew flip in. Well, it was kind of in call skew by about 5 or 6 vols on Bitcoin. It's flipped into something like 8 vol put skew in the front end, right? So it's quite a dramatic shift in Bitcoin, I would say. Yeah. Similar story on ETH, flipped into put skew in the front 2 expiries as well. I'd say ETH is kind of holding a bit more of a call skew in that long end, as people are thinking there's a catch-up trade in ETH. There's been a fair amount of December call buying going on in like the 3,800 to the 4,200 strikes on ETH. But ETH keeps showing us little signs of wanting to outperform, and then it fails, right? Like tried to take out 3,500, didn't manage it again. I don't know. I'm not convinced. I don't think ETH can really break out materially back to 4,000 unless Bitcoin looks strong and continues to kind of take out 100, personally.
But like for me, I mean, it's funny, God, how quickly, like, you know, the narratives and that shift, like it was all just euphoria last week and now panic. But it just looks a very kind of normal bull cycle to me. I still think everything looks like super bid. Nice pullback. In fact, you kind of want to see this. Like,
you do want to, I agree.
Like, and it's funny, like we love round numbers and everyone gets excited by 100K. I was excited by 100K. Just, it's like, I guess a bit of a landmark.
You started talking about 1 million after that.
Oh yeah, I'm still on 1 million. Like, but yeah,
it's not 200, not 300. Let's just go straight to 1 million.
But like, I think that's ultimately like the destination over the next few years, particularly if it does get made a strategic reserve asset in the US.
Well, let's talk a little bit about that then. So what's the delta on that? Like, have we seen anything around that story that makes us more confident, less confident? Like, what do we think?
I mean, firstly, we're all tracking Polymarket now, right? I think at one point that was at 50%, and then it's dropped down to like 37 or something %.
Right.
But yeah, look, the headlines are still that's what they're going to look to try and do. I think obviously Trump has now nominated Scott Bessent as his Treasury Sec. I mean, Howard Lutnick was in the race. Both pro-crypto people. Sort of Scott Bessent kind of he kind of backs the whole digital asset vision, and he's sort of very supportive. So he's building an administration. Look, Nick's going to be the Commerce Secretary, I think. So he's building an administration that are all very, very crypto friendly. And yeah, like I kind of feel we're going to get this done. I do think we're going to get this done. So yeah, if that happens, I think the market is massively underpriced for what the impact of that is. Like, I think it's huge. I think the other interesting thing is I've been worried about the bond market move since Trump got in, worried about the dollar move and just the headwinds that's creating. Now, with Scott Bessent, again, probably less hawkish than what people would have thought.
Yeah, I mean, everyone was thinking before the election that it was likely if Trump got in, the equities were going to rally, right?
Yeah.
But I would argue a lot of macro guys were more convinced the yield curve was going to steepen than they were about stocks higher on a Trump win.
Yeah.
So there's been a big change in narrative around what a Trump administration means for deficit spending right? And for the yield curve, right? So to the point where we're now seeing flattening of the yield curve. We're seeing Powell talking less dovishly about near-term rate cuts. Yeah. It's like the opposite move to what people were thinking.
Yeah, right? and that's going to be causing quite a lot of pain, I imagine. So I think I definitely think the bond move has quite a lot further to go.
Bonds rally.
But bonds rally, yields lower.
Right.
And I actually think that's going to be a nice little tailwind then, because it's been a headwind. But I think that's going to be a nice
been a headwind,
tailwind.
but it hasn't had impact though, has it?
Yeah, because supply-demand dynamic.
Yeah, yeah.
But you have we start to, again, I think once we just digest some of this supply, which I think over the next couple of days, then the demand, I think the demand is going to be constant. It's going to be like this just constant flow of demand coming in. Which is why I think it's going to be really hard to sort of fight this move over the next sort of few months.
What about the ETF options? They launched with a bang, I guess, right?
Yeah. Again, everything you want to see, right? Huge volumes,
big volumes, lots of call buying. 4-to-1.
Yeah,
the ratio or something. Calls to puts.
Yeah. So it is all good. Like, I think we're seeing a very normal correction. I think the macros turn more positive. I think Trump's there was headlines overnight, right, that he's going to stick 10% tariffs on China if they don't.
The market hasn't moved much on that.
Do you know, I think everyone. I mean, we moved a bit, and I think that's partly why we dumped a bit overnight. But I think everyone kind of gets this is just his negotiating tactic.
Yeah,
this is what he does, and in a weird way, he's kind of giving like forewarning to say like. Was it with China? It was on the fentanyl stuff, and then with Mexico and Canada, it was about like get a hold of immigration. You've got a chance to do it now, otherwise, when I come in, this is the threat. So it just feels like everything just feels like a negotiation tactic with Trump. I think the market's been far too hawkishly priced for him and the tariffs. So the kind of risk reward, if you like, is that we kind of just taper that out. And then he's like Treasury picks and stuff like that would suggest that we're not going to be that hawkish. There's also this contradiction in that, you know, the idea that we're going to have this really hawkish, like high tariff, strong dollar type thing. But then you've got people like Scott Bessent who wants a weaker dollar. Trump saying he wants a weaker dollar. They want lower oil, all this stuff. It kind of runs like contrary to that theme. Yeah. So
right.
I think
so they talk tough, but actually their motivations and what they actually want mean that to some extent they can't really deliver on that tough talk to an extent.
And I've been trying to like work so many different scenarios, and we're trying to deal with so many unknowns. And I don't think we should overcomplicate this too much. I think number one, you know, I don't think it's going to be as hawkish in terms of what it means for rates and everything like that as what the market's priced, because I think he'll temper that down. Also, Trump doesn't want yields going up, you know, flying up, and nor will Scott Bessent. So I think they'll get a lot better control of the sort of bond market. I think as well, like, you know, we're still, if you look at some like the nowcast data, the US economy is still showing signs of slowing. So I kind of feel we had this bit of a pickup in the data that was probably that last bit of juice from like pre-election spending. And I expect that to soften, which will give the Fed the reason to sort of start like cutting and still. So I'm still very much in the mode that we're going to get the rate cuts. Market's probably underpriced, I think, for the Fed now. So we're probably a bad jobs report away from from the Fed sort of sounding a little bit more dovish. So I think we have to right here, right now, keep this picture in mind. We've still got a slowing US economy, right? Whatever Trump does down the line, the Fed can't react to that. Powell said the same himself, right? So we're still going to be getting rate cuts into all of this. Europe right now looks pretty fucked. Like and it's been led by Germany and France slowing down. So we had like the composite PMIs out of Europe last week back in like contraction territory. So the ECB are the ones that they're going to have to set things up. Wouldn't be overly surprised if they go 50 bips in December.
That's why the euro's getting battered, right?
Yeah, the euro's getting battered.
But what do we think about this World War III risk? Is this a noise that we should be fading as usual, geopolitics? Because, the market seems to be ignoring it to a large extent, right?
Yeah.
But like, is there anything there you're seeing that we should be concerned about? Like,
I always fade it.
You always fade it. Yeah.
I always joke, if we go to World War III, nuclear war, your puts aren't really going to help you.
They're really not.
But like again, I think Trump, maybe it's the last hurrah of this Biden administration trying to cause trouble. But
last hurrah tried to start World War III.
Yeah, but like that's like that's
not funny.
But that's what the Democrats do, right? But Trump's going to come in and probably. That's not going to be his MO, right? So,
but it seems strange though that you can even have a situation where the people have elected someone else, and then the people who are in power now for the next 2 months can do really crazy shit,
I know.
like potentially kick off a massive global war for the other administration to have to clean up when they come in. It is a bit nuts that is even possible, right? Yeah,
it's madness. This is why as well. Like, I always go back to some of my core. Like rationale for holding Bitcoin. It's like, I don't want to be at the whims of whoever's in power and they come and go and stuff. You've got this asset that is very predictable, backed by code. It's not at the whims of an individual or a group of individuals. So increasingly I'm like, why would I want to be in anything else other than Bitcoin? And sort of ride out that volatility.
I get that in terms of like the real pure kind of view on Bitcoin, but the reality is as well, there's some big ass whales like Saylor out there who, if they decided to turn around and say, yeah, you know what, we think Bitcoin's done now, we're going to sell it or sell all of it. How much would it crash in a day? So do you know what I mean? Like, there are players who have massive price impact on Bitcoin. So that even though, they're not really controlling the fundamentals of how Bitcoin works, they're certainly going to control where it goes to an extent. Yeah,
and markets trade really on the marginal buyer and seller, right, at any given point. So yeah, you get a big marginal seller come in, and we're going to see big corrections.
We really need to get Micheal Saylor into this podcast.
Yeah, we do.
Talk about him way too often for him not to actually. Micheal, please just come on the podcast. It'll be a laugh, I promise.
Yeah, the one thing. The one thing I'm surprised that we haven't heard too much of yet is, there's a whole stuff that Saylor's speaking to Microsoft, right?
To teach them how to buy Bitcoin.
I think now with the Trump administration, obviously the reserve asset thing would be huge, but I also think what would be huge would be to start seeing more like blue chip corporates saying, right, we're now having a Bitcoin strategy of some sorts, and be it Microsoft.
But I feel like the Bitcoin strategy, obviously it's made him a shitload of money, right?
Yeah.
Okay, it's made him billions and billions. It's made his stock go from whatever market cap to like 300 billion market cap.
Outperforming every stock.
Right? But that was a delta call on Bitcoin.
Yeah.
Okay? But, I can definitely see a reason for smaller companies to put Bitcoin on their balance sheet to increase the volatility of their stock.
Yeah.
So they can tap the convert market the way he has, right? Yeah. That's actually quite a smart strategy for like a capital market strategy, right? But companies like Microsoft, who make billions anyway and are established and don't need to raise capital, they can easily raise capital cheaply enough. What's their incentive going to be to do that sort of stuff?
Again, it's like, what are you doing with that capital? What are you doing with your balance sheet and your treasury? And you've got
probably not taking a massive delta bet on crypto.
Yeah, but you but like what are you putting it in?
Fixed income.
And if you've put it in treasuries like over the last few years, how's that worked out for you?
Not great.
Not great at all. So you've got a fiduciary responsibility to your shareholders to manage their capital in the most efficient way.
Yeah.
And if you're not now putting it in what has been for the last 10 years best like vol adjusted returning asset, then questions are going to start to be asked, like, why are we not doing this? Why have we put it in treasuries that have just lost however much they've lost over the last few years?
I mean, if we're seriously talking about a world where all those big blue chips are seriously considering that, God knows what this price is going to do, right?
Now you're getting on my $1 million.
Yeah, but I don't know. I still feel like the hurdle's quite high for them to get their head around that personally, right? But we'll see.
Yeah, but like the one thing, like certainly this year must have taught us all, if not the last sort of few years, is just how quickly everything shifts in this space. Like it is mind blowing. I say we've gone from like 4 years of quite an abrasive like US government, the SEC just trying to target everyone and sue everyone who's slightly involved in crypto, to now having an election where crypto played quite a central part of that election. And I don't know, who knows, like it's probably a little bit of an exaggeration to say like determine the election, but it was certainly a big part of it. And we've now got a very crypto friendly administration, now in power, and talk of Bitcoin being a reserve asset. If you'd said to me 4 years ago that's a conversation, you go, maybe 10 years down the line, but it's happening really quick.
That's right.
And I say I think we discussed this maybe last week. One of the big narrative shifts that I think is really interesting is when I've spoken to like traditional asset managers or corporate treasuries, banks, a lot of them kind of get the Bitcoin thing, right? They do get it. A lot of them will say, look, privately, I own a load of Bitcoin or what have you. But there's always been this career risk of like...
Yeah, stigma.
Yeah, and we can't be involved in this, right? We blow up on this, we can't be involved in it.
Yeah.
And then also, which is a fair enough comment, like until we have this regulatory framework, which it's just something we can't get into. Now, we still haven't got that framework, right? That's clear. But now I think the career risk starts to become... If you've not got a Bitcoin strategy or a crypto strategy, like you need to be thinking about it now.
Yeah.
And there's going to be people saying, what's your Bitcoin strategy? And it's not going to be sufficient to go, oh, well, no, we don't believe in it. Or it's so I think now the career risk is not actually at least be thinking around this and starting to put some sort of strategy in place. I think that's a huge shift. And it'd be amazing as well. Like, we are like these herding instincts. Once a few big companies start doing it, then everyone's doing it, and we'll be sat here in 6 months' time going, "Oh my god!" Like now it's like, everyone's doing the Saylor thing. Or
last question.
Like,
have we hit peak Doge? Because Doge obviously has tripled or quadrupled because Elon and now Vivek are there, the Avengers, to clean up the US government and make it efficient. Is that peak Doge?
Mate, I don't think we're even close to being peak on that or this Altseason. Like, we've had a really good run, right? We're now taking a bit of a breather, which has been led by Bitcoin, right? But we still got as well, just going back to the macro, we've still got this really positive macro environment, liquidity picking up, we're still in a big rate cutting cycle. We've still got to refinance all this debt into next year as well. We've still got this debt ceiling that we're going to hit in January, at the start of January, and probably $750 billion to come into this market, right? So liquidity is going to be flowing. One of the things as well, I've seen people saying about how M2 has been falling. Problem with that is it's measured in dollars. So when you get this dollar move, it makes liquidity look like it's fallen a lot, which it kind of has, because like when the dollar rallies, it's a kind of squeeze on global liquidity, if you like. Cool. But if we start to see the dollar unwind, which I kind of think it will. It just looks a little bit overdone on this whole Trump trade, particularly if they're going to come in and want a weaker dollar. Also, as well, if the dollar starts to cause too many problems, then the Fed will start to flood, the system with dollar liquidity. So the liquidity is still picking up, and that'll be helped by a weaker dollar. Global rate cutting cycle, the TGA sort of flooding into the market into next year. So I still think we've got a really big alt season ahead of us. for the next few months.
I better buy all my meme coins back then.
Buy all your meme coins back. Not financial advice as always, but no, look, I think we've had this really big move, but this is all very kind of in keeping with post-halving, post-election, and I still think we've probably run into. I'm going to be balled up until maybe second quarter of next year, and then the liquidity picture changes quite a bit, and then we probably have a really decent correction and everything, and we can talk about your hedges.
Talk about my hedges. More premium to burn.
Yeah.
All right, I think we'll call it a day. That was a good one. Good to have just a one-on-one chat with you.
Yeah.
So make sure you like and subscribe. Obviously, we're going to have. I think Dave is out on holiday next week. Is that right?
Not on holiday. It's a
Not
work
holiday.
trip.
Sorry. It's a business
Toronto.
trip.
Yeah.
So I'm gonna have a different co-host, special guest in with me next week. So we will catch you then. And actually, before we go, tune in to the Twitter Spaces. Because you'll be able to talk to us live with a really good panel as well. We're going to discuss all these things and more. We'll catch you next week.